Okay, great. It is to pass the hour, so I would suggest we start the public dialogue. So welcome everyone to the A2ii-IAIS public dialogue on closing the health financial protection gap, expanding access to health insurance in times of crisis and beyond. My name is Lucas Keller, and I'm a policy advisor with the Access to Insurance Initiative. I will be your moderator for today's session. We have a very exciting lineup today, but before we begin, just some quick housekeeping. First, please be aware that this webinar is being recorded, and for sound quality, you're muted. Should you wish to unmute to ask a question, please contact the A2ii Secretariat, either here through the chat or via email. For questions, generally and to the extent possible, please use the chat box on the right-hand side. For those of you wishing to access the simultaneous audio translation in French or Spanish, instructions are being sent over right now by my colleague Caroline via the chat box. And also, finally, please note that this public dialogue will have a duration of 60 minutes. We may overrun very shortly, but please note that translation services will not be available after the hour. Apologies for that in advance. And then I'm very pleased to say that we are joined today by Manuela Speimbuller. Manuela is head of implementation of the IAIS, our partner in organizing these dialogues. She will now give a few introductory remarks to kick off our dialogue. Welcome, Manuela, and please go ahead.
Okay, thank you. Thank you so much, Lucas, and hello to everyone. I'm very, very happy to be part of this exciting public dialogue from the A2i on closing the health financial protection gap, expanding access to health insurance in times of crisis and beyond. It is very important that we have a public dialogue on this topic. And usually when we speak about protection gaps in the insurance industry, we usually think about natural disasters. There are huge protection gaps, and we know that with regards to natural disasters, only 1/3 of the economic losses is usually covered. But we must not forget about protection gaps also for retirement income and pensions, and last but not least, also for health matters and health insurance. There are huge protection gaps, and there are two components of such a protection gap. So one is, of course, the level of stress that a health spending can have on household finances. But also very important, such a health protection gap can really prevent people to seek the treatment that they may need because this treatment is not affordable. So these two aspects are really very important with regards when we now enter into the dialogue and speak about the health protection gap. So in this respect and in this context, it is in particular important to think about the most vulnerable, because health expenditure can really also put the most vulnerable in even more poverty than they are already now. In this respect, I was also looking at the Sustainable Development Goal number 3, which is on good health and well-being. You know, the A2i's theme of the year are the Sustainable Development Goals, the SDGs. And SDG number 3 says that to ensure healthy lives and promote well-being for all at all ages. So that's quite a goal. And it's also important to think about, okay, how did the pandemic, COVID-19, impact on the goals? So the last decade was really a decade of progress. And this progress is now at risk to be either stalled or even reversed due to COVID-19. And the major progress was made on reproductive health, but also on maternal health, which is also linked, and child health. And not to forget about vaccination. Vaccination programs also contribute a lot to health all over the world. So the pandemic had in particular an impact on health with regards to two items. On the one thing, it's really disrupting essential health services. You may have heard also at the onset of the pandemic about, should a COVID test be covered? What about the coverage of the costs, the hospital costs, for example, if people then need to come also into intensive care units and so on. So those were very quick discussions at the onset of the pandemic last year. And secondly, it's not only about the disruption of the essential health services, it's really also, we see more and more data about shortened life expectancy. So that also is one of the effects that, where you can see where health is impacted, that could also have an effect on shortened life expectancy. Health workers also belong to those who have been heavily affected. It is really about nurses that care of people in hospitals, for example, or also about midwives. So that was also very difficult for them to continue to do their work during the pandemic. We really can see that, in particular, the limits of the healthcare workers have been stretched by the pandemic. So many are quitting, many are tired and exhausted. We really can see the impact, and that is, of course, also having an impact on the quality of the health services. So to conclude and to wish you a very, very happy and constructive dialogue on the health protection gap, I would like to say, okay, we should all strive to invest in universal health coverage because it's essential. And let's advocate for affordable and adequate coverage because what is our most precious good is really our health. In this sense, enjoy the dialogue, and thank you so much to the fantastic lineup of speakers that Lucas has already referred to. Thank you so much. Bye-bye.
Thank you, Manuela, for these great introductory remarks, which really set the stage well for our dialogue. The session today will entail a panel discussion with a distinguished group of speakers who will represent a diversity of perspectives on the topic of health insurance in developing and emerging markets. So let me present each of our panelists in turn. Our first panelist is Lisa Morgan. Lisa is a technical specialist at the Impact Insurance Facility of the International Labour Organization, where she provides technical expertise on health insurance in the private and public health sectors, including inclusive insurance. She has over 2 decades of global experience and holds degrees in actuarial science from the University of Witwatersrand and Bayes Business School in London, and is a fellow of the Institute and Faculty of Actuaries in the UK. Welcome, Lisa. Secondly, we are joined by Asitha Rodrigo. Asitha is Chief Technology and Commercial Officer at Milvic, also known as Bima, a leading mobile-delivered health and insurance provider in emerging markets. In this role, Asitha leads the company's engineering, product, and technology operations. He has over 20 years' experience in technology and product management, having worked in such diverse environments as high-growth private equity-backed firms, large global enterprises, and management consultancy. Asitha holds a first-class Master's of Arts degree in law from the University of Cambridge. Welcome, Asitha. And last but not least, we are joined by Randeep Singh Jagpal. Randeep heads the Intermediaries Department of the Insurance Regulatory and Development Authority of India, short IRDAI, having previously served as the head of the authority's non-life department. Randeep has wide-ranging experience in insurance supervision and monitoring, drafting of regulations, and the undertaking of on- and off-site inspections, including as it relates to the health insurance sector. He's also a member of various interministerial groups, represents IRDAI on supervisory colleges, and is a member of the IAIS Macroprudential Supervision Working Group. Finally, Randeep is a postgraduate in science, technology, and business administration and holds a law degree. Welcome, Randeep. So I know we are all very keen to start, so let me kick off the panel discussion. So as we heard in Manuela's introduction, health expenditures are a major source of financial hardship in many developing and emerging economies around the world. with out-of-pocket expenditures for health pushing somewhere around 100 million people a year into extreme poverty. And these numbers don't include the effect of COVID-19, which has likely exacerbated the global financial protection gap in health in a significant way. So efforts to expanding access to health insurance clearly need to be stepped up, and it is hoped that the recent health crisis will provide a strong impetus for progress on this front in the next decade or so. But this brings us to the topic of design and the question of how countries can set up health insurance schemes that strike a good balance between cost on the one hand, quality and equity and access to healthcare on the other. And in that regard, the overall focus in recent years appears to have been on the setting up of government-run compulsory health insurance schemes, as these schemes are broadly recognized as addressing the basic financial protection needs in health of low-income households in the most affordable manner. But it is also recognized that private and voluntary schemes can complement public options in an effective way. So starting with you, Lisa, at the ILO, you have been doing very interesting work on the question of public-private health insurance complementarity. Maybe you can start us off today by helping us understand how policymakers and development practitioners should think of the role of public and private health insurance schemes in addressing the financial protection needs in health of the most vulnerable, kind of what dimensions and functions to keep in mind. And maybe you can even provide us with a few cues as to how regulators and supervisors can ensure that public and private schemes are in fact complementary. And I understand you have prepared a few slides for your intervention, which we're happy to bring up now.
Great, Lucas, thank you so much. That's a very good set of questions to start out with. And firstly, I just want to say that, as I'm sure most of you know, if health is an area that you're working in, health is very complex, and it was complex before the COVID pandemic, and it's even more so now. So I think just to start off with and say, what makes health insurance particularly complicated is that each country is unique when it comes to its healthcare system. And in order to be a stakeholder or a player in that system, you really have to have a thorough understanding of all dimensions. And it's not usually just one system. I like to think of it as each country having its own sort of system of systems, if you like, both on the sides of healthcare provision and financing. With the private and public sectors working both independently in some cases and with each other in various capacities. So my first message is that if policymakers and practitioners want to work in this space, they should really ensure that they're familiar with the key stakeholders working in the health sector as a whole. So I was wondering if you could just now skip to my slide, the one after this. So, as an aside, I worked on a project with some other actuaries mapping out the healthcare systems of particular countries. And don't worry, I'm not going to go through the slide. It's just to illustrate my point. So here we have a slide on Egypt. And if you go to the next slide, this is Ghana. And you can immediately see, what we were trying to do with these slides. There's a link to the paper if you're interested. Is we were trying to map out the flows of cash in the healthcare system as well as the healthcare providers. And you can immediately see that, just between those two countries, it's completely different. So I would say you need to start out with by really understanding who the main players are, and also just map out the different types of healthcare funding. So if you go back to my second slide in the deck, this is just kind of a mapping of all the different types of schemes that could possibly exist. It's probably not exhaustive, but I would say that every country is a bit of a patchwork of various privately financed schemes and publicly financed schemes. If now can we skip to, I think it's slide, just keep going until you see a box. So yeah, that one. Okay, so these days what you find is that most countries have an agenda to align themselves, their healthcare policy, with universal health coverage. And universal health coverage, there's a definition that's given by the WHO. So, people should be able to access all the healthcare they need when they need it, and it shouldn't cause any financial hardship. And usually, it's actually left to the individual countries to interpret what that means, because every country has got a different amount of fiscal space. So if you imagine in this is a famous cube that the WHO presents a lot of the time to kind of describe how, with public healthcare, given the fiscal space they have, who will be covered, which services will be covered, and what proportion of costs will be covered. And usually the fiscal space is not big enough for that kind of internal blue box to fill the entire box of everything needs to be covered, everybody needs to be covered, and there's no cost sharing. And so it's in the gaps that I think the insurance industry can find its place. But the key is, we have limited resources, and therefore I would say it's probably a good idea not to duplicate what the government is providing. So turning to inclusive insurance, Lucas, from our experience at the ILO, it's very difficult, not impossible, but it's very difficult to make voluntary, market-based, comprehensive private health insurance sustainable for the low income. So what do I mean by that? I've thrown a lot of words at you. So here I'm talking about voluntary private health insurance that covers both inpatient and sometimes outpatient treatments on an indemnity basis. So indemnity being the cost of what the care costs is what's being covered. So the two major issues are anti-selection. If it's voluntary, then only the people who are sick typically will go and seek that insurance. And secondly, it's really expensive to most low-income earners. So unlike life insurance, for example, where you can proportionately scale down the benefits, it's not possible to do this with healthcare because healthcare needs are not proportional, and they're often inversely proportional to income. And furthermore, within a small closed risk pool, it's not possible to have the same level of cross-subsidy that the public sector can achieve through tax collection, where the rich in society can subsidize the poor. However, it's not all doom and gloom for the private sector, and when it comes to the low-income market. What experience has shown us is that very simple hospital cash products have been, by and large, successful for the low-income customer, especially where they're mandatory. So, for example, if they're made compulsory by banks, I'll give you an example like Women's World Banking with their microfund for women. These products are complementary to the public sector's by design. And in not being indemnity products, they pose less risk to the insurer because the amount that is paid out is set ahead of time. So they're complementary in that they're triggered usually by an inpatient stay in a public hospital, and they don't duplicate the benefits, but they provide much needed cash during times of illness. So this last slide, after this one, if you can just move on. This comes from a paper that I did a few years ago, trying to explore health and financial inclusion. And it represents a puzzle of how different financial service providers can think about including different benefits in a holistic approach into their financial services. And so, what this puzzle shows is that financial service providers, including insurers and banks, can think about, for the very extreme expensive cases, they can think about how they can enroll their members into UHC plans and then build on that with simple insurance for health and associated costs like hospital cash plans. And then also consider bundling that together with health loans, health savings account, and a host of value-added services such as telemedicine, which has proved to be really, really popular during these times of COVID-19. So again, there's a link to that paper if you would like to read more. I'll stop there.
Excellent. Thank you, Lisa. And yeah, I think the issue of value-added services will reappear a couple more times over the course of our discussion. But let me maybe ask you a question about hospital cash products. I understand that I know you're undertaking a study on hospital cash products around the world, and you mentioned why hospital cash products can are particularly scalable, let's say, or successful and easy to offer in a complementary way to public options. What are some of the findings or preliminary findings, if you can share, of that research project you're undertaking at the ILO on hospital cash products around the world? And yeah, what can maybe policymakers do to even make these products more successful?
Okay, wonderful. So Lucas, I think it's a good idea for me to just start out by explaining what the hospital cash product is. Just so that all of your listeners, I mean, some of you might know this, but I think it's important to just kind of describe what it is. So it's a simple health product where the cash payout is triggered, as I said, by an inpatient stay, usually in a public health facility. So the actual inpatient expensive healthcare is usually paid for by the public healthcare system. Sometimes this is also called the UHC plan, or social healthcare protection. The benefit that you get from a hospital cash product is not an indemnity product that's intended to pay for the cost of care most of the time. It's a cash benefit that is usually intended to cover incidentals like your transportation to hospital, medicines, perhaps their co-pays that you need to pay. It can also be for lost income, because most people in the informal sector, this is our target market, will lose income. They won't get paid if they're sick and they go into hospital. So that is what the benefit is intended to cover. And usually what happens is the benefit, it kicks in. It's a per night benefit from typically the second night onward, or it can also be structured as per hospital episode, regardless of the number of stays, number of nights. And typically there are limits, annual limits on how much you can claim in a year. From an actuarial perspective, it's quite an easy product, because you only need to know about the incidence rates. As I said before, the amount per night or the amount per stay is set ahead of time. So this is not an unknown. It's the incidence rates that you need to figure out. And it's appealing to low-income earners and also to insurers who typically work with distributors who already have a significant footprint in the low-income market. So microfinance banks, mobile network operators, for example. But there are some difficulties, and this was picked up in the research that we did as well, is that when it comes to distributing these products, and that's always the key with inclusive insurance, how do you educate people about insurance? How do you get these products to the people? Typically with the banks and the MNOs, sometimes there can be some conflict over who owns the client, and I think that regulators can get together with ministries of health, with other financial regulators, so the banking sector, regulators of telecommunications, and really promote that enabling environment so that these products can be developed and they can succeed. So other things that we picked up in our research, so we looked at 6 hospital cash products around the world, 2 from Latin America, 2 from Africa, 2 from Asia. And what we saw was during COVID-19, some of the things that were being changed in the products actually made it a lot more accessible to people. So, for example, some of the products had exclusions on COVID-19, and they were dropped as we realized that there was a pandemic. Also, the waiting period. For some of these products, there was a waiting period saying that you can't claim within the first month or 2. Some of those waiting periods were waived because of COVID-19. Also, there was a trend to ensure that maternity was covered. Telemedicine was really something that came to the fore as a hugely valuable benefit, and so that's really skyrocketed. But it's not just telemedicine for, it can be telemedicine for your general practitioner advice, but also nutritional advice, psychological advice. Telemedicine really seems to be, a great benefit where people don't have to, typically it was like to keep people away from having to take time off work, but now it's because people are obviously also scared to go into medical facilities. So I think that's also what we noticed was a lot of products going online and really focusing on becoming digital products. So yeah, we also noticed that the hospital cash providers could also be a good conduit for COVID-19 related messaging and sharing information on how to stay healthy. And another thing that we picked up with the research is that for some of these products, the turnaround time can be really, really quick, with some claims being paid on the spot and being paid within a couple of days, which I think is really, really helpful in situations where people are in the low-income market. So hopefully that answers your question.
Well, certainly, Lisa. Thank you very much for these very interesting insights. And what I find really interesting is that you say, there's always a challenge with distribution, and that in your research you definitely saw that there's a big need for products to become really digital products. And I think those are two interesting observations that provide a great segue to our next panelist, who's Asitha Rodrigo. So Asitha, you are Chief Technology and Commercial Officer at Bima, which is one of the leading mobile delivered health and insurance providers in emerging markets. Maybe you can start by telling us a little about what Bima does and what some of the innovations in terms of its business model and the use of technology were that made it so successful in many developing and emerging markets.
Sure. Thank you, Lucas. Can I just ask you, can you hear me? I had a bit of trouble with my sound earlier on.
Yes, we can hear you.
Brilliant. Thank you very much. Actually, Lisa's provided a great introduction to a lot of what we do, because a number of things that she touched on are covered by what Bima does. So Bima is a fintech for healthcare. So we provide over 5 million underserved customers in 9 markets in Asia and Africa, a safety net of insurance and medical services for them and their families. And it's a combined product. So we don't just provide insurance or just telemedicine. We provide the whole spectrum. On the insurance side, we provide life insurance. And our main medical related product is the one Lisa mentioned, hospital cash cover, to cover medical expenses while being hospitalized. With medical services, we provide, if you looked at her slide there, that's a great guide. Pretty much all of the value-added health services that Lisa mentioned, Bima provides as part of its telemedicine service. So in addition to 24/7 doctor consultations, targeted health advice on common primary healthcare problems, access to specialists, lab tests, offline services, health tips, and provider lists within the network of providers that we have partnerships with in our countries of service. Now, typically, customers are lower to middle income, and traditional insurance, as has already been mentioned, or private medical products doing comprehensive care, are inaccessible. So how do we achieve the scale? Well, we understand that our customers operate under very different circumstances. So for example, large upfront monthly or yearly premiums are often not affordable, irrespective of the total cost. So we take premiums in most markets via daily deductions. And that's really only possible through the use of technology and tight integration with the payment methods that we work with. In addition, your cover is not lost if you miss a payment, and that works with hospitalization cash products, because you can provide proportionate cover. And then because insurance and telemedicine are attached, what we do as a company as a benefit is, if you miss 1 or 2 payments, we still keep your telemedicine cover as well. So you don't lose that. And that gets over the problem of you can't provide medical services on a proportionate level, but we cover that through by combining insurance and telemedicine. So you still get some cover if you miss 1 or 2 premium payments. We also widen access through simpler and more affordable products. So as has been mentioned, we don't offer comprehensive insurance. We offer simple policies and clear pricing and benefits. So that's very important, because the level of understanding of insurance in our markets is relatively low. So there's an education component. But all families who sign up at a given benefit will get the same benefits for the same price. So we don't provide sort of individual actuarial analysis. It's one price for every one of our customers. We also look at the spectrum of technology that's being used in terms of distribution by our customers. So we use the technology that they actually have, not the technology we wish they use. And that's where a number of organizations haven't quite worked out in this field. So in emerging economies, we work with telco partners to enable micropayments through prepaid mobile phone credits, and services can all be accessed via our call center through feature phones. So you don't need the latest gadgetry to access the services. Now, we do see in many of those markets a movement to using things like mobile money wallets, and we integrate with those as well. So we're addressing the market as it moves so that people can still pay for our services. And in more advanced markets, we're now integrating with payment gateways to access payment cards, for example, that more sophisticated customers are using. But wherever we operate, everything we do can still be accessed via a feature phone and calling our call center, because we have that service available as well. And what we also mention is we don't just offer a digital service. So it's effectively a people service supported by digital technology, because we know that digital penetration isn't 100% in a lot of those markets. I think the summary is we've been able to scale because we spent 10 years really understanding the difficulties our customers have with payments and income, that they can often be on the wrong side of the digital divide. And they're often new to the benefits of insurance, and they don't want complex products, and new to the benefits of telemedicine. So they appreciate simplicity and solutions that address their problems. I think that's how we've got to 5 million customers in those 9 countries.
Margaret, that's super insightful. So basically, yeah, adapting to the realities of the customers, which many times means also simplifying the products, both in the way you reach people as well as pricing. So that's really interesting to hear. Sita. So turning to the question of regulatory and supervisory challenges, could you tell us maybe what some of the major regulatory challenges are that BIMA kind of regularly encounters when it seeks to expand in a given market, and maybe some lessons around best practices on how to solve these challenges, maybe even in dialogue and collaboration with sure. regulators and supervisors.
Of course, Lucas. So I think the major issue is that we are a multifaceted service. So, excuse me, a major challenge isn't actually meeting regulatory requirements, but clarity as to what the regulatory requirements we need to meet are. You know, we're not just a sort of fly-by-night insurance sales organization or digital app platform. All our medical services are provided by doctors and registered medical professionals who are employed by BIMA directly and are registered in the country where they operate the service. And where we sell insurance, we follow the available guidance on how to operate within that territory, the regulatory advice that is available. The issue is often what the rules are and which regulator applies. So, for example, in some areas, we provide access to services through mobile airtime deductions, as I've said. Hence, telco regulators take an interest. In some areas, we use the same essential technology back end to access credit cards, but at that point, banking regulators will take an interest. We provide insurance services. Obviously, insurance regulation, it comes into play. And finally, we provide primary healthcare, so healthcare regulators take an interest. And in some of our territories, there's a split between just normal medical services and telemedicine services, so there's additional requirements, or in some areas, even the regulators themselves don't know what regulation should apply to telemedicine as opposed to traditional medicine. So in some of the territories we operate in, we actually work with the regulators to develop the rules because there haven't been any rules for a service like us. Because we're one of the very few organizations who provide healthcare services with micropayments on mobile and other platforms combined with insurance. And we're happy to work with regulators. The problem is where there's no regulation, unclear regulation, regulation taken out of context, or 2 different regulators who disagree with each other, with us in the middle. And I'll cover a couple of examples. I know there's a number of representatives from national regulators on the call, so I'm not going to name names or specifics, but I'll give you 3 examples that we faced in the last year. So in one territory, we're ready to launch medical services provided by registered doctors who are regulated by local medical authorities, but we can't because the medical regulator is not sure which rules should apply to telemedicine services. Now, our doctors are the same doctors you find in your local clinic. They just don't operate from a clinic. They provide the same services and they follow the same medical protocols. So we're working with the Ministry of Health to come up with, should there be any additional requirements, but they're still not certain. So we can't launch any services. In another example, two different regulators, the telco regulator and the insurance regulator, couldn't agree on whether we could provide insurance services through subscription payments. So at one point we were told that we would need explicit permission to deduct each daily micropayment via a sales call for every payment. Now, that is just totally unfeasible because they're applying a regulation for a different context, and it doesn't actually help us or the customer, because the customer wouldn't want to phone us every single day to make a payment either. And this is despite customer for Bima explicitly giving permission to take payments at the beginning of their subscription. They have to actively tell us to do that. In the third example, we are being examined as a bank. Despite being nothing like a bank and providing no banking services, because we are taking payment via a banking partner. And that's an example of regulation out of context. Now, we've come across numerous other examples. We don't complain about regulation. We want regulation, and we want clear regulation. And the way to resolve it is to understand that we're happy to be regulated, and we're happy to talk to regulators to come and speak to us. Come and speak to what problems we face in practice in bringing the services to those people. And also, I think, to understand that the old world of clearly delineated services has gone forever. So it'd be great if regulatory authorities within a particular territory could speak to each other to work out where those borderlines are. And we're happy to work with them on those conversations.
That's really, really interesting, Asita, and then something that we also witnessed at the A2ii, that there's just a lot of value in having formats to working with supervisors where representatives of other authorities and policymakers come in and basically speak together about what is necessary to make a solution in the market viable and scalable. So those were very interesting insights. And I think the issue of regulatory clarity and communication between authorities is just very important when we think about how to expand health insurance and similar services across the developing and emerging world. So you mentioned COVID-19 and digitalization and kind of telemedicine, which was spurred by this huge push for digitalization over the past year. Could you provide in a few words a little bit of an overview of how COVID-19 impacted Bima's strategy more broadly in thinking around kind of the most effective ways to expand health and health insurance related services? Maybe you can provide us a quick overview, just because it's such a pressing and interesting topic.
Absolutely, Lucas. And really, it's echoing a lot of what Lisa said earlier on. In a situation where a large number of our customers had none or limited access to traditional medical services, it's confirmed that Bima's remotely accessible services were critical to families within our markets. So the question was how to expand that coverage, and the answer is to invest far more heavily in our digital access technology. Importantly, not just so that people under our care can more easily access our services, because that's the thing that people normally see, but also so that our customer service and medical professionals can provide that service from wherever they're situated. And that's the other side of the equation that people often forget, is how do you get the doctors working remotely, not just how do you get to the patients via apps and call centers. Also, we did design products specifically for covering COVID in markets where a number of traditional insurance products wouldn't cover COVID claims. And again, reflecting what Lisa's research suggests, including hospitalization cash benefits if you're hospitalized due to COVID cases. We added vaccine side effect cover also. And even though there's virtually no take up of it, it provides some element of trust in the vaccination program, which I think is really, really important for customers in our markets. But it's not just about providing insurance products. It was also about providing health advice. So we provide specific health information programs via SMS and via our smartphone apps about how do you reduce the risk of COVID infection, how to deal with mental health issues arising from isolation. But what this also made us realize is that we have a tremendous power in delivering condition-specific health guidance that goes beyond just COVID. So we're supplementing our general services, and we're now gathering data on what are the primary healthcare problems that, when COVID ends, our customers are facing day to day. So we then we're producing targeted health advice for those primary healthcare conditions like hypertension, diabetes, etc., through health screenings for all of our customers. So it's had a twofold effect. It's validated our distribution model and helped us make the decision to accelerate it to cover more customers. And it's also made us think about the benefits we're bringing to people to ensure that they're relevant and personalized to those problems that are top of mind for them.
Oh, very interesting. Thank you for sharing those insights. And yeah, we mentioned the importance of clear regulation, regulatory, and supervisory mandates. And with that, I would like to move to our next panelist, Randeep. Randeep, you represent A2ii today. Maybe you can first start off by explaining us a little bit what the role of A2ii is in regulating and supervising private and voluntary health insurance in India, and how that relates with also the public compulsory health insurance scheme in India. That would be super interesting.
Yeah, first of all, good morning, good afternoon, and good evening to the various participants. And thank you, Lucas, and thank you to A2ii for giving me this opportunity. I think so we've had some excellent, conversations and public dialogue through Lisa as well as Asito. I think so their insights were very, very remarkable. And being a regulator, I think so, we fully sympathize and we fully empathize with the challenges that they have been facing. From our perspective, from IRDA perspective, we regulate and supervise the entire insurance value chain. So starting from insurance distribution, so we regulate the insurance intermediaries, the insurance agents that they are in the market. We regulate the insurance providers, namely the insurance companies. Then the servicing companies, like the third-party administrators, are another set of entities that are governed and regulated by us. There are various supervisory mechanisms that we follow actually. So these are broadly actually divided into off-site and on-site supervision when it comes. When you look at off-site, there are a lot of returns and a lot of information, financial and non-financial information that is fed into the authority, which is then kind of analyzed to look into the various indicators. On-site, as you very well imagine, is actually now shifted to kind of online inspections by the authority. So given the COVID situation, we're not visiting the insurance companies or the insurance intermediaries, but look into their computer systems and look into their various transactions remotely, and then see whether they are complying with our laws and regulations. More importantly, before we license them or we grant them certificate of registration, we do undertake a due diligence report on them. We also look at the people who are actually behind those entities. We undertake a fit and proper criteria. Very importantly, in this whole scheme of things is the product approval, scheme, where products which are launched into the Indian market require prior authorization whenever it goes for policyholders, individual policyholders, or to the retail customers. So it's to ensure that the customers' interests are protected. We also ensure there is a strict code of conduct for the intermediaries and the service providers, so as to ensure that one, no mis-selling happens, or the policyholders' grievances are addressed quickly and appropriately, I would say. Very important, people who are outside this whole scheme of regulations are the hospital providers and the laboratories, etc. We have tried a unique way, because in our country we don't have a health sector regulator. So what we've tried to do is we've created an organization which actually registers all the insurance providers which are there in the country, all the hospitals. And we've requested and we advise them to have accreditation by a board called the NABH, so that minimum quality standards which these hospitals are expected to provide are actually, kind of provided by these hospital or network providers. This in very broad terms, I would say, is what the regulatory and the supervisory framework pertains to the voluntary health insurance in the country.
Myself. Thank you so much, Randeep. Maybe you can explain to us also, you mentioned in the previous conversation that the two of us had that you're very closely also working with the public health insurance scheme to see to what extent complementarity can be ensured. So maybe you can provide us a little bit more detail on what exactly A2ii is doing in this regard.
Yeah, thank you, Lucas. And I think so. I would refer to the Lisa's paper where very clearly they the ILO demonstrated the universal health insurance coverage and then the top-ups actually which have been kind of envisaged. All those things are very much prevalent in the Indian market. So, for example, you have a government scheme which is at a certain level for the poor people, and on top of that we have products which are called of the top-up covers. So above a certain deductible, the individual can buy these top-up covers to the extent they feel happy with. We also have hospital cash covers which are very popular in the country. We've already granted approvals for undertaking telemedicine advisories to the policyholders and to the customers. We also have in pipeline an OPD product which would possibly look at how the outpatient consultation with the doctor can be attempted. We are working under the regulatory sandbox on a model where we could see premium financing for health insurance covers being extended to the policyholders. There is another proposal under the regulatory sandbox, which is the crowdfunding of these premiums. So these are very interesting topics that are at very early stage, but we are experimenting, exploring these things. We are also come out with wellness and preventive features guidelines, which allow these value-added services to be tagged on to the insurance policy. So these guidelines are very much operational. We are looking at wearables as a means of pushing customers to lead a healthy life so as to reduce the premiums and all. So that's another thing that has been kind of envisaged. We are in the process of standardizing the claims formats so that the time taken and the processing is actually reduced to a minimum, I would say. We have also come out with standard data submission guidelines which enable us both from the public space as well as from the private sector to submit the data so that we can work out the morbidity rates for or the incidence rates for different diseases. So that's something which is work in progress and gets regularly updated. So these are some of the steps that as IRDAI we have worked to in order to increase the insurance health insurance coverage in the country actually.
That is super interesting that you have such a wealth of solutions targeting this particular issue of complementarity, and I think many of these are a great inspiration to other jurisdictions connected hopefully today. I have a few more questions to each one of you, but I would also use the opportunity to maybe invite questions from the audience at this point and actually see a question by Connor Donaldson, who used to be with the IAIS. Hello, Connor, first of all. And he says that he finds this a fascinating discussion and that he has a question about trust. So trust remains apparently a significant issue for the industry, the health insurance industry, hindering efforts to increase access for underserved segments. How big is the trust factor for health insurance? What are views on how to address it in the health insurance space? And basically, whoever would like to take the question, obviously I'll be invited.
Maybe I can answer from a commercial provider point of view. This is a huge issue for us, right, in our markets, because to be honest, trust in insurance in well-developed, say, Western European markets isn't exactly sky high. but knowledge in some of the markets we operate in is lower. I think two things: education and well-enforced regulation, which is builds up trust. So to have a government organization audit an insurance industry and give it its stamp of approval, that's a huge benefit to us, which is why we're very positive about regulation, because it says, it's not just us saying it, your government saying that you can trust these people. Education, BIMA runs sessions where we go through the basics of insurance and our services, and those individuals who run those sessions aren't allowed to sell anything. We actually don't even mention we provide the services, because it's a benefit to us that people understand what insurance is. And we just run those sessions. Sometimes we don't even mention that we're BIMA or who we are, and then they go away. And then salespeople may call people up randomly later who've had one of those sessions. So and we keep the two sides separate, because it's really essential that people understand what insurance is. Yeah, those are the two areas I would say for us.
Absolutely. And if I can jump in there, I think, making sure that there is clear regulation where the regulators endorse the products is definitely very important and highly relevant, I think, to most of you on the call. But from the ILO's perspective as well, what we find is that really paying claims quickly and when they need it is the best way of building trust. So the insurance has to do what it says it's going to do. If it's providing a good service, word of mouth will spread. This is the way to make sure that people trust you if you do what you say you're going to do. So I think anything to make sure that it's easy for insurers to fulfill their promises will help build that trust. So yeah, I mean, it sounds so simple. Do what you say you're going to do, but really, we call it the claims, the moment of truth. This is what's going to build trust.
I think I would echo that, Lisa, from BIMA's point of view. We try and speed up the claims process as much as possible. This is also an area where we really appreciate working with regulators and making it easier for us, particularly in situations where we actually want to provide a whole loop service. So everywhere we operate, we want to operate the claims process. And in some cases, that's quite difficult because we're not the insurer. And when insurers outsource their claims process, that can sometimes be quite difficult. But from a customer point of view, it absolutely makes sense, because we sell it, we tell you about it, and then we service it. So it's a one-stop shop, and it makes it much easier. So the smoother we can make that process, the better for us and the better for our customers.
Just to supplement both Lisa's and Asito's submissions, so what in the IRDA, what we've done is we've kind of designed these standard products and launched it through the insurers into the market. So very standard products, so there is little confusion about what they cover, what they don't cover. So in addition to that, we insist upon a sales illustration, a one-pager sheet for the the customer to actually understand what is being covered, what is not being excluded. We've also kind of in our regulations and in guidelines, these are indirect means, but in our guidelines we've very clearly spelled out what are those items which can be excluded from the insurance policy. So these are standard terms, if one can say so. We've also issued guidelines as to what should be the turnaround time for pre-authorization of a cashless claim and final settlement of a claim as well. So we audit these companies on those various parameters, and there have been instances where the companies have got a rap on their knuckle for breaching those guidelines. That's one way of actually building up the trust. May not be the most best way, one can say so, but I think so, as a regulator, we do owe a moral responsibility to the customers. Thank you.
And perhaps I can make one more point, I think, related to both what Lisa and Randeep have said. We'd really like to work with our partners in the insurance industry to make the terms easier to understand. I have had a conversation recently with an underwriter where we had to exclude nuclear fusion incidents from hospitalization cash policy, but nobody on the call could tell me what a nuclear fusion incident was, right? We deal with this every day, and it's then difficult for us to have that conversation with our customers. So we don't want to have that conversation. So I think, you know, as an industry, I'd really appreciate working with insurers on making the terms simpler and more relevant to the kind of customer we're dealing with, because it's not the kind of customer you normally deal with. And I think that would really, really help trust, is to look at things like exclusion lists.
Yeah. And then just to kind of go off on a bit of a periphery there, I think there are things that can be done when it comes to education. So I think, you know, making sure that you can translate things into local dialects, take into account if people are illiterate, you know, really make sure that people understand what they are buying. And perhaps that can also be part of the regulation, you know, like make sure that it's very clear that the organizations know their customers well and do what they can do. The insurers and partners can do what they can do to make sure that things are clear, concise, uncomplicated, simple.
Mm-hmm. No, I think those were all great comments. So basically, yeah, making sure the products provide value, are easy basically to use for the customer, both let's say on the premium payment as well as the claims phase. Education you mentioned is very important around the value of insurance, and then a regulator that basically provides through a good framework and supervision kind of nudges for providers to actually fulfill these functions and thereby create trust. So no, very great discussion. I don't see chats right now in the questions in the chat right now, but maybe if anybody wants to unmute and then ask a question verbally, that's also more than fine. Very welcome. I would ask if there. I don't see anything. Quickly come back to Randeep. So we all know that India was quite severely affected by COVID-19 this past year in particular. And I just wanted to see in that context, you have been very active at ERDA in addressing you know, the crisis, and what have been some of these actions in response to the crisis in the country, especially as it relates obviously to the management of health insurance offerings. That would be interesting to understand.
Yeah, thank you, Lucas. I think so, you know, we were also, you know, kind of caught off guard when the pandemic hit us. But then, you know, we realized, you know, given the size of our population, we need to move fast. So, you know, we did a couple of things very, very quickly. One is that we designed these COVID products, you know, these were, you know, kind of products which in association with the insurers, we designed them, and within a period of 1.5 months, these products were launched, and that was the need of the hour at that point of time, because given, you know, such amount of interest and, you know, the panic there in the market, they were really, you know, kind of lapped up by the customers who were very keen to get some form of protection against COVID. Secondly, what we did was, you know, making payments for the premiums was always a challenge because of lockdown. People were not going to their work. They were not running short of cash, and India works on cash before cover market actually. So what we allowed was we allowed installment premiums to be paid for these kind of covers actually. So that reduced the financial burden for the customers, you know, in reaching out and buying these policies. Third, what we did was we also came out with, you know, a temporary authorization where temporary hospitals that were being set up by government and other institutions were recognized as hospital facilities and treated as equivalent to hospital. So anybody walking into those kind of centers could actually undertake the full treatment and still not being kind of excluded under the policies. We also, you know, kind of, as I said earlier, gave clear guidelines around the turnaround times for pre-authorization and post-authorization. Lastly, we also, you know, encouraged insurance companies to set up helplines, not just for COVID, but for all health insurance covers, which were manned 24/7 by qualified doctors who were trying to explain to the customers and the policyholders and other people, you know, what are the things they need to actually look out for, how to keep themselves protected, and kind of, you know, dissemination and educating those people. So these were some of the steps, you know, especially in the health insurance space that we undertook and which we thought, you know, gave a good positive feedback about the insurers, you know, in India actually. Thank you.
Thank you, Randeep, for sharing these insights with us. I don't see right now any additional questions in the chat. Oh, I see one from Dunya. She asks, Asitha, she writes, I believe you mentioned that you had some success working with certain regulators on bringing clarity around regulations. Would you mind expanding on that?
Yeah, I don't want to mention any specific regulators, but in one of our African territories, we have worked with a national regulator to look at what is required in providing remote medical services, because there weren't any regulations, and we were the largest provider. So it made sense for us to advise on that. And we're happy to do so in any other market as well, because in a lot of the markets we operate in, we are actually the biggest provider of such services in the market. So we're happy to speak to them on what the rules should be.
Oh, thank you, Asitha.
Yeah.
And yeah, I see we are past the hour and already unfortunately lost our translation services. So I would, if there are no further questions in the chat, oh, I see one more question. I think we do have time to address it. From, again, addressed at Asitha.
Yeah.
From BIMA's perspective, would you say that clinicians are contributing to the resistance to using telemedicine approaches amongst due to a high level of perceived threat to their professional control?
That's a really interesting question. Not for us, because we hire those clinicians. So all of our medical services are provided by doctors, and they're the ones who control our medical service. So each territory we operate in has a chief medical officer who's a doctor, and then we hire doctors. So it's very difficult for us to say that. I think maybe in some government services they might see it as a threat, as you would in any territory where there's a private operator in parallel with a government provided service. But at the end of the day, the medical service is provided by those very same clinicians, and they're happy to join us. So our clinicians don't have a problem with it, but they work for us.
Excellent. Thank you, Asitha, and thank you, Lynette, for asking that question. So with that, unfortunately, our time has run out. But yeah, I think this dialogue provided an excellent opportunity to learn about the role of private and voluntary health insurance in expanding financial protection in health in not only in developing and emerging markets, by addressing both the role of private sector innovation in the case of BIMA, and that of policymakers, and ensuring complementarity with broad-based public schemes, especially in the context of COVID-19. I'm looking here especially at the contributions by Lisa and Randeep. So again, many thanks to all of you, Lisa, Asitha, and Randeep. Please note that this webinar was recorded and that we will share the link to the uploaded webinar as well as the slides used in this dialogue shortly on the A2i website. And of course, we also invite you to keep an eye on our website for more information on upcoming dialogues and events of the A2i. And with that, thanks again, and hopefully see you all soon.
Thanks so much.
Thank you so much, Lucas. Thank you.